Real estate investment trusts are still on sale, relatively speaking, considering where a lot of them were trading at not all that long ago. Now, this is definitely partially due to the fact that the Federal Reserve still has not cut interest rates low enough to where REITs are once again able to borrow money for nearly nothing. Although if we look right here in the Fed rate monitoring tool, there is a good chance that at least later on this year and beyond, interest rates are going to be much lower than they are currently. Now, in this video, I'm going to go through 3 different real estate investment trusts that I still think are considerably on sale if you are a long-term investor that of course has some time ahead of you. Now, if you're looking for some cheap REITs, make sure to stick around, drop a like down below, and let's get into the first one. I just finished my brand new dividend investing ebook where I share exactly how I went from 0 to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first REIT, or in this case a telecommunication tower REIT, that I still think could be offering a buying opportunity for investors is American Tower, or ticker symbol AMT. Now, AMT is currently offering around a 3.51% dividend yield, and AMT has some super fast dividend growth, which I'm going to show you in a second. Also on top of that, AMT has a super safe dividend, rated as a 78 on the dividend safety score. Now, the stock that we're talking about is American Tower. Now, American Tower was founded in 1995 and converted to a REIT business structure in late 2011, minimizing its taxes on its real estate assets and kicking off its dividend program. The company owns a portfolio of around 171,000 towers that are located mostly in suburban and rural areas and leased out to wireless carriers under long-term contracts. Now, American Tower's infrastructure is used by carriers to provide wireless service to consumers and businesses, transmitting signals between towers and mobile devices. Most towers have a capacity for 4 to 5 tenants. American Tower operates similar to other triple net lease REITs in that its tenants pay for almost everything needed to transmit the signals for their communications, except the tower and land that American Tower maintains. Now, as a result, the company's maintenance costs are extremely low, making its adjusted EBITDA margin a few years ago exceeding 60%. Now, looking at AMT's performance long-term on the max time frame, AMT is up 754%. This REIT is going to be a little bit higher beta, and I've held this REIT in my portfolio on and off for years. Now, on the 1-year time frame, AMT is down around 12.67%. The most recent low back in October was $157 per share, now trading back up towards the higher end of the 52-week range, but just as of recently, AMT is now trading down around $20 from their most recent high. Now, there's definitely the more low beta REITs and the higher beta REITs, and AMT, like I sort of mentioned, is going to whipsaw the portfolio around a little bit more than some other ones out there. But with that being said, investors are going to get exposure to a starting dividend around 3.55%, and like I mentioned, some significant dividend growth historically. To give you an idea, AMT's most recent dividend, which was paid in December, was $1.70. Now, if we were to go back around 10 years ago, AMT was paying around a 34-cent dividend, which honestly, correct me if I'm wrong, might be the fastest growing dividend across the entire REIT sector. So if you do want some exposure to some different type of REITs, because again, AMT of course is a telecommunication tower REIT, AMT is definitely one to look into. The next REIT that's still offering a buying opportunity, in my eyes at least, is Triple N, or National Retail, which is currently offering investors still a well above 5% yield at 5.65%. Now, if you were like me, you were lucky enough to buy a lot of these different REITs when REITs were really getting hammered a few months back, and I got a ton of shares of National Retail well above a starting yield of 6%. But even still, for a long-term buy and hold play, National Retail trading below $40 per share, I still think could be an amazing opportunity long-term. Now, National Retail owns some of the highest quality triple net real estate across America, and side note, I think ticker symbol NNN was one of my first holdings when I first started investing. Now, as far as NNN's performance long-term, this REIT is up 195+% on the max time frame. Now, ever since 2020, when the market sort of crashed, this one has not been able to make a new high, which again could poise a great buying opportunity for long-term REIT investors. But the fact that NNN does have a very safe dividend and is offering a 5.62% forward dividend yield as of right now, and also offers some dividend growth, which you can see right here. This REIT, at least in my eyes, is a perfect buy and hold opportunity to get some exposure to some super high quality real estate and basically get paid more and more year after year in dividends while I wait for the price to recover back to new highs. Now, the last REIT that's still on sale that I have of course am buying a ton of shares of is ticker symbol O, or Realty Income. First, for maybe the 1 or 2 people that don't even know what Realty Income is a REIT, or a real estate investment trust, and it's a member of the S&P 500 Dividend Aristocrat Index. Here in the website, it also says for more than 5 decades, we have invested in people and places to deliver dependable monthly dividends that increase over time. Realty Income also owns over 13,250 real estate properties, primarily owned under triple net long-term lease agreements. Now, Realty Income has paid over 643 consecutive dividends, which we're going to go through here in a second. But even more important than that, I said a second ago during the intro that Realty Income is probably one of the best singular buy and hold single stocks. And one of my main reasons being is that Realty Income, although it is a single stock, Realty Income, of course, is not an ETF. It's a single stock, it's a single company. But within Realty Income, you're almost getting exposure as if you're buying into like an ETF with multiple different companies within it, because Realty Income is so diversified. I said a minute ago that Realty Income has 13,000 plus properties, that every single time you buy a share of Realty Income, you're getting exposure to all of them. So right here, for example, out of the top 20 clients when it comes to Realty Income, even if a few of these, let's say, have a bad quarter or have a bad year, or maybe are tied up into some controversy, Realty Income is so diversified that it's going to take quite a bit to even budge this REIT because of its size and its strength. Now, for those reasons, I buy Realty Income consistently, almost as if I'm getting exposure to an ETF. And although Realty Income is a single stock, I feel as if it's a sleep well at night stock that almost has similar qualities to that of a high quality ETF. Now, Realty Income is still offering a massive starting dividend yield of 5.77% to investors. Realty Income's dividend is about as safe as it comes as far as REITs go, at least in my opinion and the opinion of Simply Safe Dividends. Realty Income has been absolutely hammered over the last year, down around 20+%, but on the max time frame, of course, Realty Income has done very, very well, up over 550%, which I happen to think it's only a matter of time until Realty Income has a 7 in front of the stock price. But of course, until Realty Income recovers, and even if it takes 1 year, 2 years, 5 years, it does not matter to me. And side note, if you guys don't know already, I have over 2,800 shares of Realty Income that I've been gathering for almost 7 years now. I will gladly get paid around 5.7% starting yield, which is why I've been buying more and more shares of Realty Income. And also, Realty Income tends to raise their dividend on a quarterly basis, which back when I first started buying shares of Realty Income, I was getting paid around 21 cents per share per month, and now as of recently, around 26 cents per share per month. Which I get it, if you only have a few shares, might not be all that much of a difference, but now with my 2,900 shares, it's definitely starting to get up there. Realty Income being one of the most diversified, high quality REITs across the entire market, and still trading in the low $50 range, is more of a reason than ever to buy more shares if you ask me, which is why I've been loading up on Realty Income as of recent. So there we have it. Those are 3 different real estate investment trusts that I think could be still offering a great buy and hold opportunity for investors that of course have a little bit longer time frame ahead of them. But just in the conversation of ticker symbol AMT, NNN, and ticker symbol O, Realty Income. As of right now, where each of these REITs are trading at, if you were to have to buy and hold one of these REITs, which one would it be and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.